Hello guys, welcome to this weekly analysis. So on in this video we're going to talk about Cadjpy. So as you can see from this level, this Cadjpy, and I'm right here on weekly time frame. So we'll take the analysis from the weekly at least to the 4 hours or probably 1 hour. So as you can see, Cadjpy has been giving us very bullish momentum. That means it has been trending. So in order not to just waste time, if you have to look at it from this level to the current level that it is, you can see that the momentum has been going up. So now what I will do is I will just go straight to marking the recent structure that the market has created and continue from there. So if you can see, we had a break of structure from this level, then there is a break of structure from this level in weekly time frame. So, and it met all our criteria. What is our criteria? I will use this red line to mark my inducement in weekly time frame. Okay, let me just use the normal line to make it clean. So this is our inducement in weekly time frame. This is not an inducement because this push do not come above this first high that the market created. You can see, so this is not a complete pullback. Assuming that it clears up, then we can mark this level. So this is the pullback, the last pullback that the market did before the market actually gave us a break of structure to the upside. So and from this level, you can see the attempt was market did what? Sweep this high. So, and when market sweep this high, what are we going to look out for? We look at the last low that the market created, which is this low that the market created, and then we mark it as our inducement. But this is not a break of structure yet, because until market close above this line, this line, then that's where we can confirm the break of structure. So as you can see, we have another attempt that the market created here, and this is when we now validate this break of structure like this. So now that we have this break of structure like this, the first question is, where is our low? Because let's say market is coming and give us high, where is our low? This level. So why? Because this attempt, market refused to break above it. This is where the market actually closed above this level, the sweep that I created in the first attempt. So it means that we had our low here. Our low will be here, which will be protected in weekly time frame. Then let's see what the market do next. Immediately market keep coiling up. After market take out this high, market coil up and coil up. At the end of the day, you can see this is the kind of structure that we have in this level. You can see that market actually break above like this, then small pullback, then another pullback, then small pullback inside, then push. So if we are to look, this is not a major pullback because this pullback is inside this big candle, this red candle, or this pullback. So we are not going to reckon with this one. So what we do is we use this last one that the market created, which is going to be our inducement. So if I'm to mark it, it means that we have our inducement here, we have our low here. Then what are we going to look at for after market created inducement? After market take out inducement, now we look for our POIs in weekly time frame. So as you can see, we look for our POIs. This is going to be our trading range from this high to this low. So once you identify your trading range, what are you going to look out for? I said you come to the downside of the range and do what? And start marking your other block. But the valid other block must do what? Must have a fair value gap in between it. So now if you look at this last second, you can see that it has been mitigated already by this what, let me expand this, by this move. So as you can see, it has been mitigated. So if I'm to put it up there, you can see this candle has been mitigated already. So it means that this is not going to work. Then we go to another one. All this has been mitigated. All this has been mitigated. So but I'm seeing something here. You can see after this sell move has been mitigated. Next one, so this is the only other block with fair value gap. This one with fair value gap, you can watch my previous video to understand how I was able to spot this fair value gap and valid order block. So now you can see that this is the fair value gap and this is the other block with fair value gap. We stretch it. If you want me to stretch the other block, the fair value gap for you, you can see that we have a tiny gap in between it. So this thing, it requires a lot of years of experience for me to identify it. So it's not that maybe I'm just picking it. It took me a lot of time. So you see that if you can look at it closely, we see that we have a fair value gap here. So we were able to mark the one at the extreme. So now this one has been mitigated. So it means that this is going to represent our extreme. If you don't understand what I'm doing here, you can watch my previous video. I've done probably part 1 to part 6 of how my perspective in the market step by step. So if you watch those videos, it's going to help you a lot. So now we have this other block, and immediately below our inducement, we have to look for another other block if we can find any. So, and as you can see, there is no valid other block here. Everything has been mitigated. This is not a pullback, so it's not going to, we will have a valid imbalance, but it's not another block. So this is the only one we will reckon with. So, and as you can see, after market push out, market come to this level. After market did this, this is not, this is our major, this is our major inducement. This is our confirmed break of structure. This is our high. Then this is our high. This is our low. This is our trading range from here to this high. So this is our range. So now if this market want to continue to go up, then it means that I have to come to this other block, and you can see it came nicely after fail, take out this inducement, then market drop, mitigate this only other block that we had there. You can see market has been respecting that other block. Why I'm not worried is because there is no valid other block below. So anything that make market to fail this low, it means that this trend is likely gonna change in weekly time frame. So now we've mitigated the POI. So what will you do when you mitigate the POI? We can take it to 24 hours, 24-hour time frame, which is daily time frame. You can change it there. So and see what market did immediately it mitigates this POI. So and you see, so what we are to look out for is what structure is the market creating. So from this POI, we will start marking our, because POI means that this is the level that the market will get to in a weekly time frame, that the trend will continue because we are in bullish momentum. So now what we'll do is we start marking our structure in the daily time frame and see what the market is giving us. So you can see that in daily time frame, market mitigate this level. This is the high that the market created. Then this is the high that the market created. This high, this is the low. The market sweep this low. Then so in this case, we can mark this level as our change of character for daily time frame. Now the same process, immediately market break the change character. What are we going to look at for? We look for our inducement. You can see then POIs. Where is our POIs? This is our immediate POI that is resting below the inducement. So and there is no valid POIs below because this one has been mitigated, but for experience sake we use this level in case if market comes here, because of what, this level sweep this previous level. liquidity. So we can use this as a hidden POI, but this is the major valid POI that we have here. And as you can see, after that, in daily time frame, market is respecting these weekly POIs. So it means that we have a break of structure here. So immediately we had a break of structure when market closed above it here, our liquidity will be resting here. But before, we are expecting the market to come down. Market created another liquidity and push up. So it means that our liquidity will be resting here because we have a valid POI. Remember what I said, this kind of POI, market respected it here this week. So then if you look below, because this is supposed to be our trading low for this current situation, then if you look below, you can see that there is no valid POI. If you talk about this one, it has been mitigated. So no valid POI in this trade. So in this level, we can switch to maybe 1 hour or 4 hours and start buying the same process, start looking for the same process and buying to the upside. So, but for the daily time frame sake, we are still marking the structure. So you can see market mitigates this POI and push up. So this analysis is majorly for swing trader. So if you are trading below, you can use any time frame, but a swing trader majorly because it gives you the longer view of where the market is actually going to. Not, you won't be clustered in the lower time frame, like be confused. So let's go on. So as you can see, this daily time frame, POI respected, break of structure confirmed, break of structure confirmed. So when the market broke this structure here, close with this candle, what are we looking for? We are looking for our inducement. We are expecting the market to come down and take out this inducement, probably do what? Mitigate this extreme. But what does market do? Market decide to create another inducement. A lot of people will mark this high as break of structure. This is not a break of structure. Break of structure must take liquidity. So if you look at it in the real side, you will know that what moves the market is liquidity. Once the market is done with one side liquidity, it goes to another side of liquidity. So, and liquidity has plenty names. It can be your stop loss, it can be your TP, it can be imbalance, it can be any of the. So it's where the market is, money is where the market moves to. So now that we have our inducement here, what does the market do? First of all, we can use this level, this as a POI, but why it's not valid is because if you look at it, okay, it's valid. So you can see this is our decisional. So this is our decisional, this is our inducement, this low, then this candle. I don't know how I can explain it, but watch my videos, you will see how I was able to spot out these POIs of a thing. You can see. So this is the decisional POI, which is 50-50, but this is the extreme, which is high probability. And one thing is, most people think because market they have a POI, market must come there. No, what market need is liquidity. Your POI is just a level that you are preparing to enter the market, knowing that market has taken out all the liquidity. And why is what market can also use is imbalance. Market can also feel the imbalance, mitigate the imbalance, and do what? And continue in its own direction. So, and as you can see, in this case, market did not mitigate this POI. Now, currently, market mitigate the imbalance. If you want to see, you can see that market actually mitigates the imbalance and market has been responding to that imbalance. So now, this is the situation we have in daily time frame. And for this trade to continue to in its momentum, then our break of structure will be here. So now that we have this, what can we do? How can we get into this trade? You can go to 1 hour or 4 hours. Let me go to 4H for clearer view. If it's not clear in 4H, then we can go to 1 hour. So, and as you can see now, when market mitigate this level, you go to your entry time frame. What you want to see is as your entry time frame structure change character, yes, after market mitigate your POIs. If that's yes, it's a sign that market want to continue. If no, then you wait, you allow the character to be changed. Or if you start seeing bullish momentum after market take out inducements, this is an inducement in higher time frame, and you start, maybe you come here and you see that market has been creating bullish momentum, creating bullish, you can join, because what market needs is liquidity and he has taken it. So, but for accuracy purpose, for certainty and discipline purpose, we have to wait for market to mitigate our POIs. So in this case now, if I'm to mark 4 hours, you can see that if you just look at it, you can see that 4 hours look like we had a break of structure here. Then in 4 hours, it looked like we had what? We had a change of character here. So then after change of character, you can see that 4 hour dish out inducement, and market went back there to mitigate to take out the inducement and do what? Market break the structure. So in this level now, you can see we had a break of structure. What next are we looking for? We wait for market to come to this inducement, and as you can see, nicely went back to that inducement and closed down. So now look at it. This is the break of structure that the market created. If you look at it, if you have to choose POI, you can see that this is the POI, but market refused to mitigate it. So as long as market is not even valid because it has been mitigated. So as long as market take out the inducement and there is no POI above, then the structure and the plan is complete. So you can see break of structure, break of structure. Then what next? We look for inducement again. So if you look at it, you can see this is where we have a valid pullback, we serve as our inducement, and this is the POI above it. You can see our market do what? At least mitigate this level from this low. You can go to your if you are a day trader, you can go to 15 minutes time frame and start looking for sell in this level. So if you had a sell from here, your stop loss, but me, I prefer my stop loss to be here, but depending on the confirmation you use, you can still have some profits hit here. At least you have more than 2.5 hour. So now it means that this is our high that must be protected. But because you can see when markets came down here, it mitigate this fair value gap. That's why this that's when the buy momentum set in. This one, market responded to it because there is a supply zone here and there is a POI there. So, but because this trend is done coming down, it's likely to be done coming down according to what the market is telling us, then you can see change of character happens here, because market did what? Market changed the character. So look at this. After we had a change of character, what do I say you should look out for? Then immediately you look out for the last pullback that the market did, which is high, low, high. So this is the last pullback that is valid that the market did, that serve as our inducement, and was our 50-50 probability POI, which is this. If you look at the pullback, this is the last other block, then this is the one that we use, because this is the one that has imbalance, the fair value gap in between it, if you can look closely. So you see, because it's 50-50, what happened? Market mitigate it, try to give small direction and fail. So but we don't have POIs below here, but we know that this low must be protected if market want to continue going up. So because there is no POI, no visible POI, sorry, you can see. So but because market understand that there is liquidity below, and you see how market created the liquidity after this level fail. So you see, after this level fail, market created liquidity to count this low. These are signs that market is ready to go, but I don't want to go deep into that. So these are signs that market is just trapping people, sweeping this liquidity. You can see that this liquidity, market is just sweeping it. sweeping in, because he knows that this low must be protected. So the highest market can do is to sweep this low, but it's not going to close below it. And by the time market sweep this low, you will see that market will mitigate this level proper if market can easily sweep this low. So now, what are we looking for? We are expecting the market to go what? To go in the direction of daily time frame and probably break this structure to this upside, because after that you can see that the market has give us 4 hours change of character. Then it means that we have to be waiting for market to come to this high to come and break this character again. So probably if we go to H1, you can see a better setup, clearer one with POIs. So the H1 setup still look the same with 4H. So change of character, decisional POI. So the only thing is, if we are going to see a valid POIs below here, let me look at it. All these are inside bar. Okay, POI, POI, POI. Everything has been mitigated. Maybe if you want to use here, market do not respect it. So everything has been mitigated. But what I see here is market actually clear out some engineer liquidity. So market clear out engineer liquidity in 1 hour, and because we know that this low must be protected, the market start reacting. So if you look at 1 hour structure, let's say you don't even have confidence to start buying from this level, then you start looking what 1 hour is doing. So, and you can see, if you are to look at 1 hour structure, after when that comes down, you can see that when market got to this level, it started giving bullish momentum. So, and when market was creating bullish momentum, I don't just 1 hour look too noisy, but I'll still figure it out. You can see that this is not break of structure because market refused to take out inducement. So all these are just liquidity that the market is gathering. So you can see. So, and if you want to go by the structure, we have inducement here, we have decisional POI here, which market responded to, and probably you can come to extreme and you see. So if I'm looking at 1 hour, immediately I see that market sweep this low, then I'll be looking for buy. So that's how the setup is, but I'm more clear on 4 hours. So if you are to buy in 1 hour now, you can set your, because you know that decisional fail, this level must be protected, then you can just look for your extreme, though it's not another block. Give it a clear or a clean space for market to breathe, then you can target your 1 to 3, or probably target the break of structure. So that's it for this video, H4 for H. So that's it for this video. This is my look for Cadjpy, looking at it and looking at what the market is currently doing. I'm expecting Cadjpy to start buying at least to this level before anything funny will happen. And if you go to 24 hours, which is daily time frame, you can see that this is going to be our final TP, which is daily time frame that align with what weekly. Remember we started from weekly. That align with what the weekly is doing. So we're expecting this momentum to continue on, and we'll see how the week will turn out. So that's it for this video, guys. If you have any question, you can drop it in the comment section. If you find value in this video, give me a like, give me a subscribe. Bye for now.